My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little bit of money here. My job is not just to entertain, but to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Holy cow, people, I am not anti-tech. I am not a Luddite. I like data centers so much, I wish I lived in one. And I did sleep next to a nuclear power plant during the rather ignominious time I lived out of my car. No police officer has ever rousted someone sleeping in a 1978 Ford Fairmont in the parking lot next to some long-shuttered Sacramento nuke facility. Yet on a day like today, where the Dow gained 385 points, S&P climbed 0.89%, but the NASDAQ jumped 1.29%. People are talking about me like I'm running around here with my hair on fire, trying to get you out the biggest winners of all time, the memory stocks, the DRAMs, and the glorious high bandwidth plays like Micron and SK Hynix. That's my nickname for SK Hynix, because this monster from Korea that now trades here has hijacked our trading and often determines how our chip stocks are going to end up. Yes, the addition of that stock in the NASDAQ 100, which should happen soon, plus the inclusion of SpaceX, has added a ton of volatility, something I don't think you truly appreciate. Oh, and I wish I had some hair to catch on fire. But that's old news. Some of you have complained to me that I've kept you out of SanDisk, which is up 570% year-to-date, Micron up 240%, Seagate up 224%, Dell up 221%, and Western Digital up 218%. I don't know how that's possible. I've liked Micron for ages, and if you ask Michael Dell, who's the most positive person in the media toward his amazing company, I bet he'd say, Jim Cramer. So I'm not anti-tech, but I do like diversification. We've had some sickening days of late where all these stocks that I just mentioned got clobbered. I started this show in 2005, determined to keep people in the market and not get blown out. Many of you forget that a whole generation of investors was wiped out by betting on the internet. Another whole cohort was destroyed by the Great Recession because they owned too many stocks that were connected to finance. They just didn't know it. These two events are the reasons why we all defaulted to index funds, going for average, because average was per se diversified. Now, I run an investing club, and I wrote a book called How to Make Money in Any Market. Both stand for picking some individual stocks, but only after you build up a comfortable position in S&P 500 index fund. Most of the so-called smartest investors have spent no time studying what happens to your portfolio if you buy an index fund and marry it with some of the greatest stocks of all time. They hate it when you buy individual stocks. They want your money so that they can pick them for you. I hate their disdain for your stock-picking abilities. It is condescending, it is petty, and it is arrogant. But I do want you to know all the risks included in concentration risk, which is one of my biggest worries when it comes to this group. In the end, I like tech, but I like it in a lot of different places. If you think Johnson & Johnson is about Band-Aids, you don't know the company. They sold that business. J&J is a company with a AAA balance sheet that invents new life-saving drugs practically every month. Later in this show, you're going to hear from 3M's Bill Brown. His company, which used to be a tremendous innovator, is now back like the old 3M with scores of new products in all sorts of industries, including data centers. It could have a multi-year move using its industrial scientific savvy. Hey, how about CVS, the only real drugstore left in this country that also provides health insurance through Aetna? Went in two different ways. Or if you consider the tech that goes into running a bank like Goldman Sachs or Wells Fargo or BNY, and how you're buying these stocks at valuations that are radically lower than almost all of tech. Robin Vince, CEO and chairman of BNY, I just introduced you last week, he just joined this evening the board of OpenAI and OpenAI Foundation. Bank tech meets AI tech. Happy? It just doesn't make sense to me why you can't diversify into these other stocks and sectors and make money, something we've done with my charitable trust, where we've given out almost $5 million in gains by being diversified through thick and thin for more than 2 decades. I don't want you getting blown out because you own nothing but semis and the group has a bad day. I fear you will take your licks and move on to another form of investing, like cash, especially those of you who are on margin. I certainly don't rebel at owning tech. Hey, my Travel Trust largest positions are Apple and NVIDIA, for heaven's sake. Sure, these haven't kept up with SanDisk or Western Digital lately, but they are unique, excellent companies that are making fortunes. Apple stock has advanced. NVIDIA's stock, stuck for the moment. Some of that's because it doesn't sell enough in China. I think it's because NVIDIA's clients are so anxious to both praise it and work against it, and the media loves to report it whenever a customer tries to design their own chips away from NVIDIA. but it's really cheap. And arguably, NVIDIA, I think it's the best run company in the world. Like I always say, you should own Apple and NVIDIA and not trade them. I think Apple's brand will allow it to pass the higher cost of memory on to telco carriers, while they also get the benefit of Alphabet's AI spending. NVIDIA, my position on this one's become controversial. I wanted NVIDIA to be the chip of choice for China, so that the Chinese would write on our tech. That was a controversial position. It wouldn't be used by the Chinese military because they don't want to be dependent on an American chipmaker anyway. But once NVIDIA started to run against a brick wall in China, I didn't want more American companies to give away trade secrets to the Chinese in order to be able to get cheaper AI. Hey, why don't you go look at the case Micron brought in 2017 against a Chinese entity that stole so much Micron intellectual property that the case became a criminal investigation by the Justice Department, one that the Chinese company pled guilty to. I'm not making this stuff up. I respect NVIDIA so much I'm willing to listen to reason. But not if national security is at stake by allowing China to have secret access to so much data from so many of our different companies. I don't think that's smart. So here's my advice. If you want to go own a memory chip maker, I like Micron. If you want GPUs, to me, that's AMD or NVIDIA. If you want CPUs, that's Intel. Racks, call it Dell. Optics, make it Corning. We always forget that when you get a big pop in semis, that's a good time to reposition. But I need you to recognize that as much as I like Micron or NVIDIA or Apple, consider how you're doing in software, say, right? Not that well. Also consider if you bought Micron at $1,200 at its high, now it's at $970. How about if you bought Western Digital at $799, it's at $548? When you look at it like that, these stocks are down so much that if you bought them on borrowed money, well, you're not watching the show, you're gone. I don't know what you're looking at. I don't know. Maybe I don't know what you're looking at. That's up to you, okay? So be aware that as someone who has worked in margin, that's right, worked in margin at Goldman Sachs, do you know I've taken someone's keys after a big blowout in technology? Send me what you have. They give me the keys. As a hedge fund manager, I moved into a tech brokerage house office after it was cleaned out because they couldn't meet its margin requirements. I've seen so many people never, ever come back here because of 330 dot-coms that got blown out in 2000. So, I mean, what do you think? I know where, my ankle, I just had, here, but this is, I'm trying to get better. I got a big wedding this weekend with my son, my stepson. Just trying to do a good job. You know, what can you do? Anyway, the bottom line, every one of the people who were in these margin situations, do you know that they're rich and brilliant before they became poor and stupid? That's where I'm coming from. And not only do I not apologize for my stance, I know I'll lose you as a viewer and a club member sometime in the next year if I don't make you take the need for diversification more seriously. Oh! That's the right one. Randy in Michigan, Randy.
Hey, thanks, Jim, for all you do. I religiously follow your strategy for one speculative stock in my portfolio. I purchased the stock for $34 after the IPO in April and attended the earnings call in May, and the stock I'm calling about is AVIX.
Yeah, defense technology. People have turned against defense because they think the budget's going to be a real problem for them. I'm not going to disagree with that. I've been looking at all these defense stocks. They don't seem to be coming back as long as we're spending so much money in Iran, or at least trying to take out Iran. That's what the plan is. Let's go to Timothy in North Carolina. Timothy.
Hello, Jim. Quick question about FedEx. With them integrating Express to the ground, how do you see their growth potential in the next 5 years coming together?
I've been flummoxed by FedEx. It was down 6 yesterday. It's up 9 today. I think that Raj Subramanian is killing it. I think that you want to own FedEx into the holiday season. FedEx Freight, I think, is the spinoff. I think is terrific. I kept them both for the Travel Trust. I usually get rid of one. I did not do that. I think FedEx Freight has a great advantage. They're going to be able to take out costs and be much more focused. So there you are. Tech? I don't know. Tech? I don't know. All right, anyway, diversification is always important, but I'm pounding the table on it right now, especially. I can't believe I have to defend myself for diversification after all we've been through. On Mad Money today, Kimberly-Clark's buying Kenvue. So how does this position the CPG company for more success? I'm taking a look at the steady Eddie dividend payer and give you my take. You probably hate it because it's steady and pays a dividend. Anyway, the credit card companies have been holding up well lately, but what does that hold for the future? I'm going off the charts. And 3M just reported a fabulous quarter that sent the stock up nicely. I'm sitting down with the company's bankable CEO to find out more about the quarter and the path going forward. So I want you to stay with the Diversified Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.